Introducing pro rata payments on the Greenstar Trading Patreon service. That's right, Patreon have finally gotten around to rolling out a pro rata based payment system. So instead of the problem of potentially getting charged when you sign up late in the month and then again on the first of the following month, you will now only be charged on the day you signed up each month going forward. So, I no longer have to recommend that you only consider signing up at the start of the month. You can sign up anytime you want now, and you'll be getting charged the way you should always have been getting charged, in my opinion. So feel free to follow the link in the description box below of this video, come over, have a read of these tiers, and then feel free to sign up whenever you like. Let's have a quick look at what we've done lately. So we've now got 165 exclusive posts. The vast majority of them are videos and educational content and live streams. We've got a recent live stream here from the 10th of November. We've got a new video for the Elliott wave series, which I think is now 15 odd videos long. This one was on wave personality. I've got one to follow on corrective wave personality that should be coming along soon. We've got another live stream here. We've got the top dividend stock picks for the month of November 2022. We've got December coming along in just over a month as well. There's so many other benefits. I'm not going to read them all out to you. Feel free to come over and have a read about those benefits and sign up whenever you like. We would be very glad to have you. Now, let's get back to the video. Hello everybody and welcome to Greenstar Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, today we're going to be taking a look at the CFDs on gold. We're not going to be looking at silver today. To be absolutely honest with you, I feel that if I were to talk about it I could probably make the situation worse in terms of causing more confusion. I'm still working on the count, but it really is an absolute pig. And gold hasn't been much better. Gold was on track doing something very cleanly, very nicely, and the 5-wave swing turned into a 7-wave swing and things derailed somewhat. Now we're going to go through various counts today. Well, I still have labelled as the primary, but I have my doubts about it now. We've had such a strong rally from this 50% retracement off the prior impulse, and we've popped out of the downward trend that we were in. And so I think 5 waves up from here and 3 waves back should probably be treated as a bullish pivot, but obviously with a tight stop and sensible risk management from that point, because we may have bottomed. However, getting an explanation for how it bottomed, that's the tricky part. So I want to start with some classical analysis first and point out some obvious stuff. So we're going to come all the way out to the monthly chart here for a minute. I know we don't do this very often. So we can see from, we don't need this horizontal here, let's just get rid of this. We can see the extreme overbought readings on the monthly time frame in the RSI here, just as we begin our downward move and negative correlation with the dollar. This was at the peak of July 1st 2020. We saw the MACD cross over on the monthly time frame, and has since the signal has remained below the average since that point and has continued to trend lower. The RSI has trended down towards oversold but not reached it on the monthly time frame as of yet, and essentially things still look momentum wise on the monthly time frame quite bearish. Now let's bring up our 250 and 60 exponential moving averages. We can see that this move here came straight to the 60 exponential moving average on the monthly time frame, and now we've had a very powerful monthly candle. Now we don't know how this is going to close. If it continues to rally much more for the last 2 weeks of this month, it could be an absolute monster. When we look at historical examples of monthly candles similar to it, this one is a big one, put it simply, and it does look quite convincing in and of itself, so to speak. Now if we come down to the weekly time frame, we can see that, as why I use the 60 EMA and the 250 EMA, is they essentially are the same thing on different time frames. We can see on the weekly we have come back to the 250 exponential weekly moving average here with the green line, and we have wicked below it, but we refuse to body below it, and we have now popped. We've popped back to the 60 exponential moving average currently as I speak on the weekly time frame, and are currently resting there. So we've come to major support. That's the point I'm essentially labeling what am I saying, laboring here. And if we bring in our wave 4 retrace, assuming this is still the idea of some kind of sideways flat, regular flat, which doesn't really finish very well, we'll talk about that in a little while, or a combination count I've had to come up with, or something completely different. Either way, we've come back to the 50 Fibonacci retracement. Now you might say 50 isn't a fib number, I know, but it is a common retracement in all markets. So 50% of a prior rally, we've come straight back to it, to the tick, multiple wicks to it, and we've bounced. That's the 60 monthly moving average, it's the 250 weekly moving average. We can see on the weekly time frame we've got divergence between the lows and the RSI. Here, a low and a higher low, a low and a lower low. And then we've had the crossover on the MACD of the signal through the average, with some green bars appearing on the histogram but still below the zero bound, looking for positive trending weekly momentum to get back above that zero bound and take out these prior highs in the MACD to have a sign of a really well supported bullish rally. We'd like to see back into overbought conditions on the weekly time frame in the RSI as well, supporting a bullish rally higher. If we fail and roll over before we see those conditions, it's more likely some kind of corrective swing before heading lower. So let's now come down to the daily time frame. So daily time frame, we have traded below the 250 exponential moving average and the 60, and we have recently come back through the 60 after it was the dominant pressure of a downward trend. As we can see here, back tested here, back tested here, back tested here, forcing the market down lower. We've broken through it, come to the 250, looking to move through it, back test that and continue higher. That's what the bulls would very much like to see. Okay, and we can see here that the divergence was much more profound on the daily time frame. We can see essentially all the way back to July, the summer, we've been curving up as we've set lower lows, we've set higher lows in the MACD, and we've done the same in the RSI. Negative correlation with the DXY index has now moved back into negative correlation. No surprise, the dollar falls and gold pops. Shouldn't be a surprise to anybody really, should it? But yes, we've had an obvious warning, and you know, I've been using this as a period of accumulation. I've always been a long-term, I say always, I've been a long-term accumulator of gold for many years, and intend to continue to do so. But I tend to, from a digital side of things, I guess you could say, in terms of holding assets which are not physical gold, then opportunity to start loading up on the miners, the ETFs, and even the spot, and just do it on the basis of this divergence is going to relieve some pressure sooner or later. And I was becoming very bullish of what I initially thought was a 5-wave move down. This was the low I was convinced by back here. 5-wave up, 3-wave back, it looked absolutely perfect to be the C wave of a flat, and then we got this final swing lower, which resulted in a 7-swing structure rather than 5-wing structure, which has been causing me a headache from an Elliott wave perspective ever since. So that's the picture on the monthly, weekly and daytime frame. If we bring in some of our support and resistance, we can see that prior support is 1611 spot 34, which is essentially prior high and prior low, swing low inside of this corrective structure here, and resistance on the way back up, which has acted as support. It's not the strongest of support, but it is there. Much more influential was the 50% retracement and those long-term moving averages, which have definitely supported the price at this level on the monthly and weekly time frames. So we've come back to major weekly and monthly support on the exponential moving averages to 60 and the 250. We've come back into a prior demand zone. We've come back into a prior support level, you know, and we've had significant divergence building up on the daily time frame and the weekly time frame in the MACD and the RSI. We've seen that negative correlation with the correlation coefficient with the DXY, signaling a at least short-term top in the dollar. It may only be a temporary correction before going higher, but we've got a lot of reasons to be bullish, and we've got that 50% retracement as well. So we've seen a lot of classical analysis reasons to call a low here and say that looks good. Now the issue comes with trying to square the circle when it comes to the Elliott wave counts. Okay, I'm not saying I haven't got any, I have, but they're not ideal, and I'll present them to you in a moment. But this kind of covers another point which I've spoken about to our members before, our Patreon members on Discord, and I always say that Elliott wave is a great tool, and but that's all it is. It's an additional tool to your analysis. It's not the be all and end all. If you're presented with a building bullish divergence on the long time frame, a sudden pop of momentum and an impulsive move higher and a retracement opportunity to enter it, then you could sit back and ask questions over the long term. How does this fit into the Elliott wave structure? Is this what I think it is? Blah blah blah. Or you could just run with it. Manage risk sensibly, place your stop sensibly, use that swing as an opportunity to enter the trade and figure it out as and when you get the time. Now, it's absolutely up to you, obviously, how you trade. I'm not going to tell you what to do, but sometimes rather than miss opportunities in the fog of war, trying to figure out the bigger structure, probably just run with what the market wants you to do until you get a chance to figure out the bigger picture. You can always play it safe while doing that anyway. So, at the moment, off a classical analysis point of view, this looks good. Right, we've come back to those major levels. We've had this pop. We're not done yet. We've got to see longer. We've got to see this momentum turn into something very impressive over time. But suffice to say, from a classical analysis point of view, we've had a strong move higher, and there's every reason to be bullish off the back of that. Now, let's now come in then and deal with the Elliott wave side of the technical analysis. And we're going to start by looking at the primary, which means we're going to bring up the long-term count and the primary count. So this is, like I said, it's not ideal, but this is the best explanation I've got based off my initial assumptions of 3 into 4. Okay, that we've got this double zigzag into an A. We've got an A, B, C with a B wave triangle into a B, which retraced 100%. Or 99%, I think, to be accurate. And then we came down 1, 2, 3, 4, 5. 3, 4, and then 1, 2, 3, 4, 5 into an ending diagonal, and then we've popped. Now, the diagonal is truncated. The fifth wave in this final zigzag is truncated below the wave here, the wave 3. So we've come down into 3, 4, and the fifth wave truncates. It fails to clear the 3. Now, in a contracting ending diagonal, every structure has to be a zigzag, and we would expect the fifth wave to likely throw over the pattern. Now, that hasn't happened here. However, I would argue that there's a reason for that. Although truncations are rare, we did get very strong bullish divergence building up underneath this. The bears and the bearish momentum was dying off rapidly the whole time, and if you are going to see a truncation, that's the circumstance in which you'll witness it. It's similar with the ending diagonal in a bullish pattern where you fail to get that throw over as well. If you see very strong bearish divergence building up consistently over throughout the whole pattern, and we do from the very start of it, the 1 to the 3 to the 5, we can see here's the 1, here's the 3, here's the 5. We're weakening the whole time, and we fail to get that last flush down. So we end up with a little truncation here. Not ideal, as they are uncommon, if not rare. But it's the best explanation I've got off of my old primary count, which I've been on for a long time now. So, from here, if that's the low, we want to see 5 up. Okay, and then we want to see 3 back. And this will be the next major opportunity to enter. 5 up in here, this will be 1, 3 back, into here, that's 2, and then it's 3, 4 and 5 off the new highs. Okay, so just because it's running now doesn't mean we're not going to get an opportunity to add to a position or enter if we haven't yet. But we would be chasing it at the moment, given the momentum we've seen over the last few days. We're now entering overbought conditions on the shorter time frames, so we don't ideally want to do that if we're trading, do we? We want to see something come up and then something come back, and then we can run with it. Now, that's the primary count, and that's the problem with it. Because instead of being able to go 1, 2, 3, 4, 5, here's you see 1, 2, off we go. We got this funky ending diagonal pattern which isn't particularly convincing. So that's the primary. Now let's consider some alternate ideas for how to explain this 3 and 4. This is a double zigzag explanation of it, and let me explain what I like and don't like about it. The subdivision in the primary, in the intermediate W and X, I'm absolutely fine with. What I don't like is how deep the X wave retraces. Now, the function of a double zigzag, zigzag 1 and zigzag 2, is that the overall thing is a sharp correction. Its purpose is to drive price down vertically, or not, you know what I mean, not vertically, but drive price down sharply. That's its purpose. And the second zigzag's purpose specifically is to push price below the level of the first zigzag. Now we've achieved that much, not very drastically, but when you had an almost expansive X wave, which has come almost back 100%, getting a little bit deeper is still deeper. But that does kind of defeat the point of a double zigzag, doesn't it? This feels more like a sideways move, a sideways correction rather than a sharp, and the double zigzag is a sharp. So yes, the labelling works, and I've had to resort to double zigzags within double zigzags to get down in this final 7-wave swing here. I've tried to break it down into ABCs, but I have similar problems to from this pivot onwards to here, it seems to divide better as a zigzag. So you could label it ABC here and ABC here, W, X, Y, or if you're going to consider an alternate, why not consider a more complex one? So I've got ABC W, ABC X, ABC Y W, X, ABC Y, X, ABC W. So we could move it to here, actually. In fact, we probably should move it to there. So that's the DZZ explanation. If I just come in on the 8 hour, see where... No, actually, sorry, excuse me, I did finish it here. I'm counting that as an impulse, 1 into 2. So we've got 3, 4 and 5 to come into a larger 1 and a 2. Okay? Like I said, it's a little complicated and catching me out as well. But there's an alternate way to keep this as a 3 into 4. Right? Okay, so now let's consider something completely different, which is this is not 3 into 4, and is not related to this pivot back here, but is actually a cycle wave 1 top within a larger super cycle wave 3. And what the hell does that mean? Let's just bring up the count, and we'll need the count down to below, so coming all the way back to 2016. This is a new idea that I'm working on. I haven't fleshed out all of this because I can basically use the same thing I've used in the prior count. The only thing that's different is that we finished the count, rather than looking at this as A, B and C, we finished it as in 3 into 4 into 5. We finished the count here, 3, 4, quick 5 to here. Problem with this count is we end with a truncation in the 5th, which is a rarity, but it does happen. And the substructure of the 5th and the time frame of it is completely disproportionate to both the wave 3 and the wave 1. So it happens in a flash, it fails to go to new highs, it truncates, and it doesn't subdivide particularly nicely either. So we've got all of those problems, but we can at least explain this as a double zigzag, this is an X wave, and this as a triangle in the Y. So we've got a combination of zigzag into triangle. Okay, so we've got a sideways combination here, a double 3, and then we move up into a 1, into a 5th of the 1, and from here my best bet is to keep the 5-wave structure to here as an A, and then suggest A, B, C into B, okay, and then 5 waves down lower in C. Alright, and then what we're witnessing here is a B wave phony, where we've got the momentum, we've broken out of the structure, but it's sucking in liquidity. It's not a real rally, and it's going to roll over. So this is a much more bearish interpretation, suggesting that price can come considerably deeper. The pivot will actually be from here at some point as and when it comes, and that will give us a way of aiming for a C. Let's just bring that onto an original. So if we were to get a B to here, C would bring us probably back to the median line. Wave B likely to retrace between 38.2 and 50% of the A. We're currently through the 23.6. We might come back to the 50 or the 38.2, but being as the B within the B is expansive, it may not be as deep a target, more likely the 38.2. So much more bearish count, and as and when, if we do get that B wave pivot, we can then set up a channel for the A, the B and the C. So that's the more bearish count. Okay, and another thing to consider, because we have looked at the idea of that 4 being completed, let's stick with the idea that it is still 3 into 4. Okay, but this final leg isn't finished. We've just given ourselves a way of dealing with that, so let's just hide these for a moment. We can take the corrective element of the more bearish count, and we can stick with this double combination, or this double zigzag, stick with this double zigzag idea by simply using the same thing. So we can say 1, 2, 3, 4 and 5. Okay, this would be at minute degree, and then we can say A, B, C, B, B into C, excuse me, to get the Y at intermediate degree. So this would be minor, and then you've got a 3-wave swing at minute degree here, A, B, C into minute, and then now you'll get this, and this could still be 3 into 4 double zigzag, with the second zigzag being deeper. At that point, I feel that the overall structure of the 4 is becoming extremely big relative to the 2, and is breaking any kind of channeling or long-term geometry based off of that initial pivot. So I have my suspicions about this, but it is also a possibility, and this, unfortunately, is just the way it is at the moment from an Elliott wave perspective. So let's cover one more final idea before we go and before we sum up. So what if there's something really nasty going on, and something that means incredibly deeper pricing of gold? And that's the idea that on the long term count we had a wave 1 at supercycle degree, or even grand supercycle degree over here, and instead of completing into 2 and then 1, 2, 3, 4 higher as we're expecting in the wave cycle wave 1 of supercycle 3, what if this whole thing is a flat? So from the high of September 2011 to the low of January 2016 to the high of August 20 down to a C. Okay, or maybe we put the B here. Okay, now this is an extremely bearish count, and we have got 5 down to lead it, A, B, C flat. So we could go 1, A, B, C, extended C, 2, 3, 4 and 5, bringing us to new lows below $1,000. Okay, an absolute collapse in the gold price. Now, I'm not saying this is what I believe is happening. I'm not saying this is more likely than anything. I'm just saying if we're going to consider all options, we should have an extremely bearish option as well. Not something I was particularly interested in before, admittedly. I'm not even sure how I make this swing into a high here. I don't know. But maybe put the B there, suggest that this is 1 and this is 2, but I don't really see how to do that, because that's not an impulse and it's not a motive structure. So No, I don't think that would be right. I think it would have to be over here, and that would be the B here, and we'd have to get into that high in 3 waves. So we'd have to probably go maybe A, B, C at primary degree with an extremely extended C. That looks a bit odd to me. Then we've got to get this into an impulse. You see what I mean? It's dodgy. So it's a rough idea at best. It could be a combination count into an X up here for a sideways move, but then we wouldn't expect this to be so deep in the C. So I'm going to just put this in its own little folder and say extreme. Let's try that again, shall we? Bear case. Very, very rough idea. Very little confidence that that's correct, but I can add to it as and when I figure out the best way to look at it. So let's sum up before we finish for today. We've seen a lot of evidence on classical analysis to suggest that we've come to a major support level, and we're going to bounce from here and go off to new highs. Overall picture looks good, but we've still got a lot to prove in terms of getting back above a zero bound on the MACD, pushing into overbought conditions on the RSI, and continuing this aggressive momentum higher. We want to see a completed move up, pull back, and extension from that point. From the Elliott wave structure perspective, we've got a completed primary count of a flat A, B, C with a dodgy diagonal, admittedly, but we've talked our way into that truncation via the extreme or very strong bullish divergence in our indicators. Okay, 3 into 4, and we've looked at an alternate idea, an alternate way to express that having completed as a double zigzag to get the completion here. And we also have spoken about how we can extend that Y as an ABC lower, and we've also spoken about the idea that we can complete a cycle wave top here as 1, 3 into 4 with a sideways combination of zigzag into triangle, and then A now into a B wave, 5 waves down in a C, bringing us potentially a lot deeper. So I hope you're not more confused than when you started. Believe me, if I tried to cover silver, you probably would be as well, as it's even more complicated, and I really am not happy presenting my work until I've at least got some coherent ideas to present. I'm going to keep this as the primary at the meantime. If for whatever reason we make new lows beyond the 1615 level roughly, if we come back through that level for whatever reason, then this count will be abandoned, as there's no way that this move back up is part of the same diagonal now, and it makes the 5 wave move as a cohesive single impulse impossible. So I think we scrub this completely if we come to new lows. So if we take out the low back in November, early November, and then move further to take the low in September, I think this count is done at that point, and we have to consider the possibility of A, B, and 5 down in C in whatever combination would become the primary. And I think I'd have to, at the moment, I'd be flipping a coin between cycle 1 and 2 or a double zigzag going lower in a primary 4. So we'll cross that bridge when we come to it. However, in the meantime, we'll keep tracking this rally. We'll see if we get that pullback in 3 waves at some point, wherever it comes from, and then we'll see how things look from there. So anyway guys, there you go. Thanks for joining me on this technical analysis of gold. I hope it's been of some use to you. If you're new to the channel and you like what you're seeing, please subscribe, smash the like, hit the bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below, and as always, a huge thank you to my Patreon subscribers. If you're interested in joining the Patreon, you can sign up at any time now and you'll be charged on a pro rata basis. Follow the link in the description box below, head over, have a read of the tiers. If you're interested, feel free to sign up, and if you're not following me on Twitter yet, there's a link in the description box also, where I always notify the uploading of a new video. Alright guys, take care of yourselves. I'll be back with you as soon as I can. Bye bye.